beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Nikkei trading with gains of 1.25%. The Shanghai Composite is trading above the flat line.
If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term.
The upside break above 22,676 is needed. We left off at 22,400. Nifty is starting at about 22,433. Small green, small up, about 0.25%.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation.
We've hit all-time highs in the Indian markets here. And when you look at the international markets, well, the gold is trading at an all-time high there as well.
In Bengaluru under Section 9 of the IBC to claim the amount in default, which is around 22 crore rupees.
The Nifty is holding up with a gain of about 100 points and now just conquered the 22,500 mark, up 0.5%.
Our forecast was also 2.3%, so this is just marginally.
We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance.
It's green on the screen. The mid-cap and small-cap end of the market is faring slightly better. And the market breadth, advanced decline ratio, is actually quite good in favor of advances.
Well, that is the day so far, and have to say it is turning out to be a pretty decent day, even though, we sold off, but the market has been bought back from the lows. I mean, actually, the market went to being absolutely flat. We've got 100 points on the Nifty. Advanced decline is the problem. It's a little negative. Declines outnumbering advances. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Survi. Guys, hi. Afternoon.
Hi. Afternoon. Steady session, but those advanced decline lines have crisscrossed, right? Yep. In the morning, you had more stocks advancing, and now that's turned.
But it's still, because we were watching all of this last week, it's still better than last week, because last week, while the Nifty was flat, you still had the mid-caps falling. And for the week as a whole, the mid-cap index was down, the small-cap index was down about 4%. So from that comparison, at least there's still some green in the broader market. Maybe not as healthy as in the morning, but I guess green is still a good color to have.
No, absolutely. And I think, I was just looking at this. It's a simple data point. Lots of data points that people are talking about. But so the number of stocks on the NSE 500, which are above the what you call in technicals the Lakshman Rekha, 200-day moving average. Yeah. Right? That is about 12% now. Okay. Only 12% of stocks are above the 200-day moving average. This is long-term average, right? Which basically it's another, typically, between 10 and 15, the number, when it reaches 10 to 15%, you basically get a price bottom, at least. That we're at about 12.5%. So I think that is...
almost there, so to speak.
Almost.
I think we're there. I think in terms of price-wise, I think the damage is done. Yeah. So price-wise, the bottom has been made. Now, of course, where the market heads from here, whether there's recovery, what kind. I think that day we had... I think it was Sunil Singhani, was there a W-shaped recovery? Many Ws basically, not one W. So maybe that kind of a market. So chip shop, we'll see. But price-wise, I think a lot of the damage is perhaps already in. 22,500 on the Nifty for now. Actually, today the Nifty did cross, hit the 20-day. I was talking about the 200 earlier, but the 20 is the simplest, closest average, daily average. We crossed the 20-day moving average and then have come off. So I think the high is 24,577, 22,560 is the 20-day. So there was we took that out and then we're sort of trading under it. So that remains the level to take out on the upside. Sectorally, I think banks are doing well, actually private banks mostly. And then you've got this healthcare and pharma as a space, which is also doing quite well. IT is down, FMCG as a pack is slightly lower. So that's about it. That's the broader picture so far. Prima.
Sorry, I lost my chain of thoughts, but just getting back to the markets, today was a fairly steady trading session, and the Nifty's been holding 22,500. As Prashant pointed out, resistance now is trying to get back above that 20 DMA, which is 22,587. So about 80-90 points from that level. Banks have outperformed for the third consecutive session, and that's a positive. And now, the 20 DMA for the Nifty Bank is about 300 points away. So, considering the recent outperformance in banks, is it poised for more gains? That remains to be seen. But large private sector banks, NBFC, insurance companies are doing very well. So, the Nifty gainers include in SBI Life, the Bajaj Finance Twins, Finserv and Bajaj Finance. Axis Bank is a big mover on the back of the rise in gold prices. Look at the way Muthoot Finance has moved, 4.5% higher. Pharma is the other pocket of strength. So Dr. Reddy's, Cipla, Sun Pharma, even where there is good US FDA news flow like Alkem, Zydus are up and about in trade. But IT continues to remain the pain point for the market. Wipro's lost about 1.5%, but midcap IT, LTI, Mindtree 3% gone. Zensar, Hexaware are all under pressure today.
Persos is now down 8%.
7%,
yeah. So it's a big hit, no doubt. Away from that, IT definitely is a weak spot. Actually, just to talk a little more about this mid-cap market movement, there are some stocks that are falling on news. Now, IT obviously is a sentiment issue. There are others that have had a rough day today because of some sort of a news flow or the other. And we'll talk more about it as we go forward. Recent listings wherever shareholder lock-in periods have ended. And there's been a lot of price damage on some individual stocks. I'll just take two names as examples. IKS, we've been tracking this since the morning. MobiKwik, the price damage is between 6% to 10% on some of these stocks. Look at that, 12.5% now on IKS. MobiKwik is down about 6-7%. On IGI, International Gemological Institute, the certification company, their lock-in period is actually ending tomorrow, 3-month lock-in. The stocks anyway, it's half from the peak and it's still under some pressure. So that's one issue in the market where, investor shareholder lock-in periods are ending. The other casualty of the day has been Ola Electric. And again, we'll tell you about that as well as we go forward. Ola is down 6-7%. There are some concerns building up about one of their, vendors taking them towards the bankruptcy court. But having said that, there are enough gainers as well. Rima mentioned Muthoot. Look at the action and traction in the capital goods space. Hitachi Energy, GE, Vernova, TND. These are stocks doing very, very well. KC bagged orders worth over 1,200 crores. So that stock's been up since morning as well. So there's plenty of excitement. Let's not take away from that. Nuvama is doing very well. Some of the capital market plays, beaten down plays, IEX, Nuvama, exchanges, wealth managers. There's some buying, very selective buying that's happening in this side of the market as well. So very mixed trends. All is not lost in the mid-cap market. It's looking better than it did for most of last week. That's a short point. Well, so what are the trading strategies for the last hour? What can you look at? We've got Mitesh joining in as always. Let's get some thoughts going. Mitesh, on the index, Nifty, Bank Nifty, what's the take now? And what about individual stocks?
I think it's the Bank Nifty which is showing more strength. I talked about 48,600 as the target area. I think we might head towards those levels. Disclaimer, we have some positively biased call spreads on Bank Nifty, so there's vested interest. And once we clear that, I think good chance that we are looking at 48,850, 900 zones as well. So quite positive on the banking names. In fact, I have State Bank of India as a recommendation. It's been subdued today when the Bank Nifty is done well, but it's now at the hourly averages, so interesting level to buy. Keep a stop at about levels of 714, look for a target of 750 towards 755 on the upside. And the other stock which I have, that's buy on PI Industries with a stop at about 33.30 and a target of 34.50.
Got that. Let's talk about the cement sector. Now, DAM Capital is bullish on many of the cement stocks. They see demand uptick from December 2024 onwards. It's already started, driven by a revival in government capex. Nimesh joins in with more details from that note. Nimesh.
I know while you highlighted the DAM road, which I'm going to highlight as well, but in general, I'll tell you from a market perspective, not only sell-side analysts, but even some of the buy-side, fund managers have turned a bit constructive on the cement sector, and that's the reason why you're seeing a bit of uptake in cement stocks of late. Coming to DAM Capital note, which came today, they clearly say that the tides are turning for the cement sector, and hence they've done some upgrades as well. For them, the top sector pick is Shree Cement with a target price of 32,000 and Ultratech with a target price of close to 12,200. However, they've upgraded Ambuja Cement to a buy today with a target price of 555. They believe after the recent correction, the valuations have turned quite favorable with a very limited downside risk on that stock. So that's the reason why they've upgraded Ambuja Cement today. They also have interestingly, they have a counter and buy on Ramco Cement. Remember last week There were a couple of sell reports on Ramco as well after that Tamil Nadu order, which had an impact on both Dalmia and Ramco. So, but DAM has a buy report with a target price of 905, and they were neutral on Dalmia as well as Nuvoco and ACC. So that's the stock-specific recommendation from DAM. Now coming to the thesis on why they've turned bullish and a bit constructive on the sector. One, the demand uptick from December onwards on the back of the revival in the government capex, that is likely to sustain according to the DAM note. So they expect Q4 to be quite strong, followed by Q1 as well. So that's the first big reason. The second big reason is that they believe that the industry is nearing to a massive consolidation phase, which has gone between 23 to 25. You've seen a lot of acquisitions happening by both the Ambuja Group as well as Ultratech Group. So that seems to be nearing now because there are not many enough candidates left for takeover. So that's the DAM Capital expectations now. On back of all this, they expect that the pricing intensity is going to lower, which means that the industry profitability will come to a mean reversion. And that's the key reason why they've turned constructive. And they've today upgraded Ambuja Cements to buy, but they're very, very bullish on the likes of Sri Cement as well as Ultratech Cement.
Thank you very much for that. In the entire cement pack, Sri Cement has fallen the least, or it's still closest to its 52-week high. It's just about 3 to 4% away from its 52-week high, Sri Cement, while Ambuja, which DAM Capital has turned incrementally more bullish, has fallen about 30% from its recent highs. Dipan Mehta, thanks Nimesh once again. Dipan Mehta from Elixir Equities is now with us on the show. Afternoon, Nigel's not there to ask you about cement, so let me ask you.
I can tell you Dipan's answer, by the way. Go on.
Why don't you start, and then maybe Dipan's changed his...
I don't think he likes the space, but maybe he's changed his view.
Dipan, have you?
So, Rima, please tell Nigel that it is an absolute wrong time to switch out of cement as an industry that he is following, because I agree with the DAM Capital report. I feel that cement stocks have bottomed out, and this mean reversion is something that we also have been thinking about a lot over here, and especially the consolidation. And again, the stock selected, that is Ambuja, ACC, I think they are best placed in terms of risk-return profile. Normally, I don't like cement or any commodities, but I think they're at a nice sweet spot where you can have a nice trading rally over the next 3 to 6 months. The base effect is fantastic for cement. So when they report numbers for this quarter, next 3-4 quarters, you will see some fabulous alpha over there. So positive on cement. Valuations, you can keep on arguing. They've always been on the higher side. But even if the valuations remain at these levels, I think there's certainly a case to be overweight in cement.
That's really interesting, Dipan. So you're saying, if nothing else, it's at least at a nice trading point. I mean, a good trading inflection. You could perhaps look at it from that perspective, right? So you're going to play that bounce in the sales numbers, in the volumes. That's what you're looking at?
That's right. And I think whenever quarterly numbers out, maybe not so much for this quarter, but next quarter onwards, you will really see a very good change, growth in profits and revenues. So I think more positive news flow can be expected from the cement this point on, and that will improve the sentiment, and certainly it will drive stock prices higher. That's my assessment at this point of time.
Very interesting. Got it.
And which cement stock? Sorry, I missed that if you already answered. If you have to play for ACC trading and investment.
Yeah, I think ACC Ambuja fit that criteria. They are reasonably valued. And I thought that their December quarter numbers were very impressive as compared to the rest of the industry. And the Adani Group is now, getting the efficiencies out in terms of productivity and in terms of logistics also. And I think they are best placed to take advantage of the consolidation. They are aggressive when it comes to acquisitions as well. So I would put these two companies high on the list.
Interesting. So cement finally makes the cut for Dipan. Got that, Dipan. Let's talk about another pocket of the market, where you have been cautious in the past. I'm talking about IT. And we know that large cap IT you don't like. There's no growth, so you don't believe in paying when there is hardly any growth. But what about mid caps? And this is where it's getting a little murky. Rima earlier was telling us about, I think there's some reports in the market about maybe Citi cutting back on how much it's spending on external IT vendors or contractors. Maybe that's why LTI Mindtree could be down. But even Firstsource, a lot of mid-cap companies that typically have had better growth rates than their large-cap peers, there's some pressure building up there as well. Anything you like here, or anything where there's maybe an opportunity? Mid-cap IT.
See, Surbi, one of the best-kept secrets of the managements of software companies is they are not explaining how these GCCs are really creating a lot of competitive pressure for them. and how that's going to impact the medium long-term prospects of all the IT companies, software companies. Because if you see the entire growth coming in the software sector, the hiring or the renting of new places, a lot of it is being done by GCCs. So maybe there's a kind of a disruption taking place within the industry, where instead of giving contracts to Infosys, TCS, or any IT company, the Fortune 500 are going ahead and setting up their own captive development centers, and that is certainly impacting the performance of the listed players. So that's something which kind of worries me. And secondly, I think within software, you have to be extremely selective and go for players who have very strong domain knowledge or is doing something different, like, for example, Persistent Systems, which has got a very strong presence in the technology segment, and there are good tech spending still taking place over there. Or a Coforge, I think, which has a differentiated marketing strategy, which is why it's still able to get so much of revenue going. And then I was very optimistic on the ERD space and the auto space like KPIT, Tata Elxsi to an extent, but I think one needs to be a bit cautious over there. So apart from one or two software companies, by and large, we need to be a bit cautious. And as I said, we are exploring the effect of these GCCs and what that effect is having on the overall software industry.
That's an excellent point, and a point really well made. And I've seen this with my own observations across industry, including some of the larger banks as well, and the larger MNCs, when they are hiring far more than just simple it's not simple BPO operations anymore. I mean, they're looking at data scientists, they're looking at very high-level programmers, coders. So yeah, there seems to be clear competition. It's a good point Deepan brings up.
Yeah, all the hiring surveys seem to point that for the last 18 months, 2 years, IT services hiring has slowed down, while GCC hiring has ramped up to such a great extent. But the basic worry for the IT companies from last week has been that if US economy slows down, if inflation in the US is high, then what happens to tech budgets? Will they come under pressure? So that's reason number one. And today the news flow is that Citigroup, which is a large US bank, there is a TOI report, and they're talking about reducing their dependence on external contractors. The word it uses is contractors and not vendors. They want to reduce their dependence on external contractors from 50 to 20%. They want to beef up their internal tech team by hiring more people from 48,000, bring that up to 50,000. And the key reason is regulatory, because in the past they've had to pay fines for not adhering to data governance standards. There have been a penalty paid for fraud. So therefore they want to focus more on their internal tech team. Now the question is this money which is going to be taken away from external IT vendors? If that is the case, then companies like LTI, Mindtree and many others, even like a TCS, Infy, Wipro, no company discloses the client details, but analysts I spoke to said that for LTI, Mindtree, Citigroup is their top 2 client, but even others, large IT companies, work for Citigroup. So there could be some vendor consolidation if they're planning to bring down their dependence on external vendors. Some companies may lose wallet share in the process. But if they're reducing the dependence on subcontractors, then it's unlikely to have much of an impact. But anyway, the sentiment for IT has been so muted and bleak since last week. I think the Nifty IT index was down 4.5% last week. So this news flow is certainly not helping. But let's talk about Ola Electric, because that's the big loser today after a vehicle registration company, Mehta Digital Services, is taking the company to NCLT. Parikshit joins in with more.
Well, yes, this is indeed an important story. Ola's troubles have been mounting. They face almost 10,000 consumer complaints, and this is with the Central Consumer Protection Authority. The government has sought more details on those complaints. Now, to top it all, their vehicle registration agency, there were 2 of them. One of them, Mehta Digital Services, they filed a case against the company in NCLT under Section 9 of the Insolvency and Bankruptcy Code for default of payments. They are saying that Ola Electric has not paid them 22 crore rupees for registering vehicles on behalf of Ola and also providing high security number plates to companies. Now, Ola is a direct selling model, and that's why they hire agencies to register their vehicles. Now, this is important. Why? Because first of all, Ola has had a string of troubles, including a dip in sales also over the past few months. Secondly, the Vahan data, or the Ministry of Road Transport and Highways data, indicates they sold only 8,600 vehicles in the month of February. The company claims, and they said this in a stock exchange filing, that they sold 25,000 units in the month of February. So there is a big gap. Now, One, according to motor vehicle rules, you cannot sell vehicles without registration. Secondly, even if you do sell without registration, it has to be a temporary registration, which is valid for a 1 month maximum period. So Ola also needs to explain whether the vehicles that they claim to have sold in the month of February and also now in March, are these temporary registrations? Are they doing them on their own? How are they going to go about doing registrations future? How will they explain this difference between what they claim as 25,000 units sold in the month of February versus 8,600 on the government portal? Also, 7,500 units sold in the month of March to date. So are these vehicles actually sold in February and are now being registered? So a lot of questions there for Ola as well. And perhaps all these factors may be impacting the stock price.
All right, got it. Thanks very much, Parikshit. So literally, yeah, you're right. Troubles are mounting for Ola Electric as well. Deepan, I mean, this has been a tough one right from the beginning. I mean, I think it's been several weeks and months now of pain pressure. Ola sub 50. What would your advice be if someone's still holding on to the stock? I mean, exit at every opportunity, or what would you say? Because there's too many clouds now surrounding Ola.
Yeah, that's right. I think very disappointing performance post-listing and does raise a lot of questions. But, you know, this is the reality of investing in equities. I don't track it that closely because I never liked the IPO or the business model as yet. And, you know, not sure when the roadmap to profitability is, although the management says give us 3 or 4 quarters. Let's wait and see. I would say intuitively that these levels also one can exit out of the stock. But that's a very tough call to make because you're sitting on losses, you know. So I think it's a very individualistic decision.
Fair point. Since we're on the subject of autos, Deepan, let me ask you about Maruti. It was pretty interesting. We were speaking to an auto analyst in the morning from BNP Paribas. Now, they're taking a call. The stock hasn't done anything, so they were expecting some revival, and that's a stock they're betting on. But the fact is that none of the headlines, none of the numbers are still good. Maruti has undertaken yet another price hike. It's their third hike this year. I think it's a 4% hike again. And this at a time when sales are not moving. The registration data for March so far, first 2 weeks, suggests that PV registrations are still down 20%, 22% in fact, you know, if I have the right number. So what do you make of the environment when big players like Hyundai, Maruti, would you look at these stocks at all?
No, Surabhi, I think first of all, the disclosure, we are invested in Maruti, but long-term prospects are great. But I think the better stock in the auto industry would be M&M. They've been gaining consistent market share and now are the second largest auto company in India. They've overtaken Hyundai as well. And they're in a sweet spot because their models are doing well and they're in a category which is really where the growth is in the auto industry. And the other company, every time we talk about it, is Eicher Motors. And again, Nigel is not there. We'll miss him for that. So these are the two companies I think we are positive in the auto industry. But that's as a sector, I think one needs to be a bit cautious and maybe slightly neutral as well. You know, maybe brace ourselves for a couple of soft quarters. But then once the interest rate reduction starts to kick in, then you may see a reversal in the prospects and improvement in volume sales.
Street is also increasingly getting bullish on Tata Motors after the underperformance last year and in the beginning of the year. So today, HSBC has upgraded Tata Motors to a buy from a hold. Target price is at 840, so that's about a 30% upside from current levels. And the key triggers for the upgrade are reduction in discounts and warranty costs in JLR, recovery in domestic small CVs, and valuations too after the recent underperformance look reasonable. So today HSBC, but Sudarshan was telling us last week, even ICICI Securities and CLSA upgraded Tata Motors and they'd held that analyst call too. Deepan, quick word on Tata Motors. It's still not on your buy list in the auto pack.
No. Still too much of uncertainty around JLR, so it's best to avoid it.
There's also the other aspect of tariffs, right?
Yeah.
JLR, all cars are made in UK or the EU region. And we don't know, 2nd of April, tariffs go up. Although, I mean, one can argue and say that in that product category, that price segment, it doesn't matter. But cost could go up in that sense. Deepan, thank you very much.
BMW has actually warned of lower profit margins for this year because of tariffs. So I think this came out a couple of hours back. So therefore, IT analysts were watching KPIT Tech.
Okay, all right. Deepan, thank you very much for joining us and good speaking with you as always. We take a break here. We'll just come back after that. Just some good news for you, the viewer. Now, the business news leader is just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the app from the Apple Store or the Google Play Store. Just scan the QR code now on your screen. Okay, welcome back. The markets, of course, are 100 points higher, 22,500 still. Let's welcome in Nikhil Ranka, who's with us now, CEO of Equity Alternatives at Nuvama Asset Management. Nikhil, of course, has become more constructive over the last few interactions we've had. Nikhil, what will it take to get out of, what do you call it? I don't know what to call it, escape velocity. to really... Nothing, I mean, I'm not expecting anything fast-paced, but at least, you know, prices should start to move, right? You buy, you hold, and not... Maybe price-wise bottom is made, but you need some momentum here.
So good afternoon, Prashant, and thanks for having me on the show. So if you look at the last 8-10 years, Prashant, this 10 to 15% drawdown has been a phenomena that has been happening every 2 years. So if you look at 2016, we had the Brexit excuse. 2018 was Ireland FS crisis. 2020 was COVID. 2022 was the Russia-Ukraine war. And now we had this Trump tariffs and FI outflows, which have caused this correction. Now, if you typically look, except for COVID, the levels at which markets have made a durable bottom, it has been between 16.5 to 17 times 1 year forward earnings. That's where typically markets have bottomed out over longer time frames. Today, as we said, if you look at our FI 27 consensus estimates, we are at closer to 1350 levels. And therefore, we have more or less got to that 16.5, 17 times earnings level. If you look at it, you know, two more things that will make constructive is first in terms of leverage. If you look at it, the sort of futures positioning is down almost 35% from the peak. So one good thing is that clearly the market is very light now. And to top it, in terms of valuations, if you look at India's premium to MSCI emerging market, we were at closer to 75-80%. We are now down in the 50s. And the most important point is, after such a sharp fall, Prashant, the first signs that stability is returning to market is where you see the intraday gyrations come down substantially. So, Feb was a month where we had so high intraday volatility. As we have moved into March, we have persistently seen that the volatility on a daily basis has started to come down, which gives a lot of confidence to market participants once you see this range contraction happening. So my sense is price-wise definitely at closer to 2100, we've made a bottom. We should start heading up from here. 22,800 is a level where, a lot of quant funds, all those people who would have gone short on the markets because the FI positioning on the markets is extremely high. It's almost close to 28,000 crores on the index futures. So they would be looking out for that levels. And once market crosses 22,800, I think momentum will come back in the markets post we cross that levels.
After 22,800, to Prashant's point, and Prashant's following Gordon Gekko, right? He's like, enough of this now, waiting and all of that. We want momentum to come back. We want things to start rising again. And Nikhil has clarified that 22,800, which is not too far away from where we are. So, get the animal spirits back up. But Nikhil, since we're talking about the market, getting fired up, and you seem to be convinced that momentum is just a matter of time, let's talk about the one sector that you're quite optimistic on, interestingly, and that is oil marketing companies. Now, is that a tactical trade that you're advising at this point in time, or is that a bit of an investment call? Crude oil is down, we know that, and it's unlikely, God forbid, if there's another war or some escalation again, which shouldn't really happen, that's not on the charts at all. But is that the call, that oil will stay down and therefore this is a more medium-term investment call, or is it just a tactical trade for you right now, OMCs?
So I would say two things over here. One, if you look at it, one of the reasons why we are constructive on OMCs is if you look at the decision of OPEC, they have said that from April onwards, they want to again increase the production quota for respective countries. Given the backdrop that the demand growth is still less than 1%, and if we have supply increase coming through, then clearly the marketing margins, which are currently at elevated levels, will sustain. So if you look at the current gross marketing margins, on petrol, we are somewhere close to 10 rupees. On diesel, we are somewhere close to 7.5 rupees. So notwithstanding the fact that OMCs are making some losses on LPG, however, given the super normal marketing margins that these guys are making, my sense is FY26, if crude price stays here, should look substantially better. Even on GRMs, if you look at it, the Singapore GRMs are hovering around $4.5, $5. But the point to remember here is the component of diesel in Singapore GRMs is much less than 20%, whereas most Indian refineries have more than 40% diesel in their slate. So therefore, the margins of Indian refineries will be higher than what Singapore GRMs is projecting. And therefore, my view is that the earnings momentum will be there for OMCs as we head into the next 2-3 quarters. And finally, if you look at valuations, most OMCs are trading at less than 5 times EV/EBITDA on FY26 basis, whereas the average has been somewhere close to 6.5-7 times. So I think there is a 25-30% opportunity there on OMCs with very little downside from current levels. And so I think, investors could look at that sector.
Okay, set up favorable for a 25 to 30% up move in oil marketing companies. They've already started moving. Just this month, HPCL, BPCL are up 10%, though they're still down 30% from their recent peak. Let's talk about IT, Nikhil, since you look at IT very closely. And I remember from our past conversation, you've been a bit cautious about IT. But now you're seeing, trouble brewing in the IT sector. There is worry about discretionary spending not picking up as expected, tech budgets continuing to remain under pressure. Your thoughts on IT post the recent correction and IT versus banks, since both of them are in the FI books?
So Rima, coming to IT, I think what is concerning the street is given the sort of tough macros that even US is going through because of the tariff policies. even on US markets, we've seen significant volatility in that sense. Dow is also down 9-10% from the peak. As we head into Q4 results, everybody will start watching out for what is the guidance from IT bigwigs for FY26. My sense is, given where things stand a lot, and the fact that they are not seeing a major pickup in discretionary spending, as we start the year, the guidance could be a bit muted, and then as things fold out, companies could increase guidance through the year. But the fact that initially, as we move for the first guidance for FY26, there could be some sort of disappointment. That is what is, I think, getting the street a bit discomforted. That ultimately it could still be another year of single-digit earnings growth for most IT names. Because of that, I think the earnings cut could be less than 2-3%, but multiples clearly are getting derated. If you see at some of the larger names, which used to trade closer to 25, 26 one-year forward earnings, that is now almost down to 20 to 22 times one-year forward earnings. So I think it's more because of growth slowdown, multiple derating that we have seen in a lot of IT names.
Nikhil, I think you like banking as a space, right? But I think we've discussed that. Indocent, any views? And trading
I think,
yeah.
Prashant, specifically on the quantum of losses, I think that's a well boxed out problem. We all know the number is out in public domain of close to 2,100 crores. And even after taking that hit, the management has clearly indicated that they would be profitable even for the current quarter. So capital adequacy doesn't seem to be a challenge for the bank. The only thing that probably markets want to see is what sort of deposit outflows does the bank sees over the next 15-20 days? Because ultimately banking is a leveraged business. You have capital adequacy of 15-16% and you have lent out 100 rupees. So if you have withdrawals more than 8-10% of the deposit base, then obviously it gets into some sort of liquidity crisis for the bank. And to that extent, I think the move from RBI was very good. Immediately they had come clarified that should assuage some of the nerves of depositors that everything is good for the bank. My sense is over the next 10-15 days, investors will closely watch out for the liquidity situation. And if the deposit outflow number is not very high, then obviously the stock should get back on its feet. Because valuations are very lucrative. The stock is trading at now closer to 0.7 times FY27 books. So I don't think valuation is a concern over there.
But we'll know that when deposit outflow. I mean, there's...
So typically, quarter end is when most of the banks will come out with their sort of quarterly update numbers. And we will get a sense if they give the quarterly update as to what sort of outflow numbers they have seen. Because whatever weak depositor hands had to get out, by that time we would have seen the bulk of it. So if that number is not very bad, then obviously things will start changing for the bank from the first week of April onwards.
Okay, and of course, when RBI timely communication, and maybe hopefully after that, that should be limited in that sense. Nikhil, we leave it there for now. Thank you very much for joining us and running us through your views right now on a variety of subjects. Well, we take a quick commercial break. As always, we'll get you a check on what's happening in dealing rooms. Nimesh joins us for that. Some trading ideas also coming up with our technical experts after that. Stay tuned.
Welcome back. So the green color is still intact on the screen. No complaints over there. Nifty 0.5%, and the bank Nifty, the mid-cap index, actually slightly better, 0.6% higher. Not quite at the highest point of the day, but hey, we'll take it with both hands, right? That's green. Let's get Nimesh in. As usual, he's got lots of chatter with us and lots of stocks to talk about, including a specific one on Bajaj Finance. Nimesh, I'll get to that in just a bit. But what's the word out there? I guess it's a very decent way to start the week, isn't it?
Well, absolutely. A decent pullback, so to speak, trading with a positive bias. But I guess that's helping because of the very strong global cues. So I guess India's only playing that momentum on the back of the global risk on. So that's pretty much there. But from a flow perspective, again, it's a mixed day of trade. It's 1:1 is what I understand. But interestingly, there is a bit of buying interest back in the private bank stock. So that one specific sector is seeing some bit of buying interest today. Pharma has done well, but I guess the overhang of the tariff still persists, and that will get a clarity only on April 1st. So while the stocks are buzzing, keep a watch on the tariff overhang, at least in the very near term. I guess the advanced tax number could be an interesting data to watch out for. The feedback is that at least some sectors like banks and some large corporates have reported a growth YOY in terms of advance tax payments. So maybe that could be a added fillip for some certain sectors to do well in the very near term. And also towards the year end, you might see a bit of index management as well. So that's something to keep an eye on. Technically now, 22,800 will act as a very strong resistance on the upside. We've taken a 21,800 as a strong support. Now 22,800 will act as a very strong resistance. So that's the level to watch. But broadly, I guess it's a mixed day from a flow perspective. But I guess we are just seeing a bit of momentum on back of global cues.
Thank you. And what about stocks, Nimesh?
Well, so in terms of individual names, the first stock on my list is Power Grid. Selectively you're seeing a bit of churn within the PSU names, and today Power Grid stands out on back of very strong buy flow. So while the stock is consolidating, I understand there is very strong demand from larger FIs in Power Grid today. So that's the first name. The second stock is Glenmark. Again, while the pharma is doing good today, Glenmark stands out because it's been buzzing in the last couple of days. And also for Glenmark, I understand there could be a corporate development very soon. Likely a potential, monetization of one of the molecules is what the buzz is as far as Glenmark Pharma is concerned. So that's the second stock. The third name is Varun Beverages. We spoke about Jubilant Foodworks last week when I indicated that could be a small block coming in. But for Varun Beverages, the stock is buzzing on back of buy flows. Also, the expectation is that this quarter could be quite strong in terms of volume growth. And additionally, I've understood that maybe there could be a small, disclosure of promoter buying of late in Varun Beverages. So that is something to track there. And the last name is Dixon Technologies. Again, while the stock has been under pressure of late, the sell flows continues. What I understand, some domestic mutual funds seems to be seller out there. And interestingly, today there is a Goldman Sachs note as well, and they believe that they maintain a sell, and they believe that the upside looks quite limited because of potential. The earnings could be at capped in the very near term. So that's the reason why Goldman maintains a sell call. But largely there is selling as well from domestic mutual funds in Dixon.
Okay, three on the sort of buy side and one perhaps a little negative, right? Dixon.
Yeah.
It's the last one. Bajaj Finance, Nimesh, what are you picking up?
Well, Prashant, there is an interesting note from Morgan Stanley today on Bajaj Finance. It's a kind of they've written a catalyst-driven idea as far as Bajaj Finance is concerned. They have an overweight rating with a target price of 9,300. But I feel it's going to be a bit of a binary event for Bajaj Finance to track for the next 2 weeks. Why I'm saying is because Rajiv Jain's role gets over on 31st of March, so that there has to be a clarity on what next role he's going to take as far as Bajaj Finance is concerned. Remember in the Q3 con call, Rajiv Bajaj and the management quite vocally said that he would like to continue in some form if the board approves it. So next 2 weeks are going to be quite crucial as to what happens with the change of guard at Bajaj Finance. Morgan Stanley has put out a couple of scenarios with regards to this. The first scenario is that he continues in some form in Bajaj Finance. If that is the case, then Morgan expects another 5 to 8% or 10% upside even from current levels on the stock price. So that's the first scenario. The second scenario is while he's there in some role of Bajaj Finance, he also takes up a role in Bajaj Finserv, which is the parent company. Even in that case, Morgan expects a 5 to 10% upside from current levels on the stock price. Having said that, the third scenario, which is a very less likely, according to the Morgan notice, he only takes up a role in Bajaj Finserv and no active role in Bajaj Finance. In that case, the stock may see a reaction of 5 to 8% on the downside. So, which is why I said, it's a kind of a binary event to track. for Bajaj Finance over the next 2 weeks from here on. The most important trigger is what happens to Rajiv Bajaj and what role he takes up in Bajaj Finance. That's going to be a key trigger for the stock performance in the near term.
Okay, all right. Nimesh, thank you very much for that. It's an interesting one, and it's an event-driven thing, so it's a bit binary in that sense, and more kind of sort of a trading idea coming in from Morgan, just putting out the scenarios. 85, 81 on Bajaj Finance. Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
I'll go with, some buy calls given the fact that the markets are closing with strength, though I think I would have preferred a bit more upside. So REC is something which I would recommend as a BTST with a stop at 407 and 408 and a target of around 419, 420 for tomorrow can be looked at. And the other one is SRF Limited. Disclaimer, we have some positions over there. It's also a recommendation to clients. So there's vested interest, but SRF looks very strong. First time closing about 3,000 levels. So BTST with a stop at about 3004 for targets of 3060.
Thank you very much for that. New fiscal year, prices are going up. So after Maruti, now Tata Motors is talking about increasing prices by up to 2% for its entire commercial vehicle range effective 1st of April. But let's talk about SpiceJet. That's in focus after promoter Ajay Singh sells 1.15 crore shares via block deals at about 45 rupees per share. Sudarshan is here with the details.
So on Friday, SpiceJet announced that its promoter and CMD, Ajay Singh, has sold more than 1 crore shares at a price of rupees 45.34 per share, worth rupees 52 crore. Now, today there is another announcement that basically it has mainly two promoters, Spice Health and CMD Ajay Singh. So Spice Health has certain warrants, that is 13.34 crore, and those warrants would be converted into equity shares. Now, promoters and CMD Ajay Singh will be selling 3.1 crore shares to make sure that the payment is done. Certain part of the payment has to be done. That's the reason he would be selling 3.14 crore shares. And because of that, once the allotment is done, promoter's stake will increase from current holding of 29.13% to 33.47%. But as far as stock performance is concerned, in 2025, basically in last 3 months, stock has fallen 20% and it has been underperforming Indigo on the operational front. If you look at the market share data in January, its market share held steady, but it was around 3.2%. But if you look at YOY, it was down almost 250 basis points. So it's been underperforming the peers on operational front. But as far as this announcement is concerned, it's positive because at the end of the day, money will be coming in the company and the total infusion is likely to be around 300 crore.
Okay, all right. Sudarshan got it. So that is why there was a bit of a recovery on the SpiceJet stock. Let's just see where it is right now as well. Okay, not entirely holding on to the highs, but there's some very mild green left on it now. That's SpiceJet. Also, let's move to that news about the lock-in periods ending, the post-listing lock-in periods for several companies ended today. They could be 1 month lock-ins or 3 month lock-ins. And in many of these cases, we've seen sharp falls in those individual stocks. We've actually got Hormaz here with all the details. He was alerting us that for names like IKS, MobiKwik, those lock-in dates are ending today. Quite some price damage, Hormaz.
Price damage indeed, and most significantly on stocks like IKS and MobiKwik. IKS has declined to the lowest level since it has seen since its listing. It's just 2% of the outstanding equity that has become eligible for trading, 42 lakh shares, but it still had a significant impact on the stock price. And mind you that overall these 7 companies, around 19.5 crore shares becoming eligible to trade, not all of them get sold in the open market. Of course, on the same day, they just become eligible, but then that has a sentiment impact for sure. The other one you mentioned was MobiKwik. That too has seen a significant price damage, not just today, but also from its post-listing high. It was around 700 rupees, now trading at around 250, also below its IPO price. That too has seen around 6% of its outstanding becoming eligible to trade today. A lion's share of that 19.5 crore shares that have become eligible come from Vishal Megamart, which is around 15.5 crore shares. That is just 3% of the outstanding, but still that has also a significant supply coming in to the market. Some of the other names include Ajax Engineering. That too has seen around 3% of its outstanding, around 30 lakh shares. That stock is also trading below its IPO price. And
Sai Life Sciences around 4%, 83 lakh shares. And some of the others were 18 months or more of the lock-ins. The significant outstanding, EMS is one of them, a 20% outstanding becoming eligible to trade today, almost 1.1 crore shares. And that is one of the names that despite a 40% correction still is up 3x from its IPO price. And lastly, Ratnavir Precision, where around 1 crore shares here too, around about 20% of the outstanding, and that stock too has halved from its post-listing highs. So price damage all over. Be interesting to see how these stocks move from here on.
Okay, and a lot many more lock-ins opening over the next 1 month or so. And I think that same report, Novama, I think a month earlier, calculated that some humongous number, I think $15-16 billion worth of stock. The lock-in is opening for value of stock of that much. Of course, a lot of it would be promoter holding as well, so which may not be sold, but it does sort of add one more element into the mix on the downside. Well, we'll take a quick commercial break here. We'll come back in just a bit from now, and we'll have Sudeep Bandyopadhyay for a chat on what's going on. Stay tuned.
Welcome back. Well, just about 7 minutes to go before the day winds down. It's been a good, steady day so far with the mid-cap index outperforming the Nifty. We have Sudeep Bandyopadhyay joining in. Sudeep, good to have you on. You know, actually, even banks and financials overall have done really well. So, quick two-part question to you. First of all, what would your advice be to people on IndusInd Bank, whether existing shareholders who didn't sell out and are kind of, holding at higher levels, and those who are watching these events, watching the price damage and wondering if this is a buying opportunity? So, specific advice on IndusInd Bank, and then anything else that you'll buy in financials.
As far as IndusInd Bank is concerned, I'm a little worried still. I think there is an overall scrutiny of the book which is going on and which should happen, and that's happening. So let us wait and watch where things stand. The problem is a bit complex, and we need to understand. Internal review has given a figure, but the external review needs to be completed, and only then we will know whether the problem is contained with that net impact of 1,500 crore, or there is more to it. So as far as I'm concerned, I would advise caution. But if you're an aggressive investor, want to take a bit of a speculative bet, then IndusInd does look great, because it's about quoting at 0.7 book or FY27 book. And I think it's definitely much, much cheaper than many other banks. The bank, the net worth is strong. Promoter has already expressed his intention to support if necessary. So under the circumstances, I think the challenge is not much, except we don't know what is the damage. So if you're a conservative investor, stay on the sidelines, keep watching. If you're an aggressive investor, go and buy. That is my suggestion. As far as BFSI is concerned, I do like SBI quite a bit. And at current level, SBI definitely merits a buying from a long-term investor's point of view.
Sudeep, on a lighter note, aggressive investors will be hard to find nowadays. They all become conservative investors, mostly.
Well, Prashant, I was meaning that somebody who is willing to take a bit of a risk.
I know.
But old habits die hard, na, Prashant? You were just saying, when will the momentum come back? Abhi bahut ho gaya. How long can you just keep buying a stock and looking at the price, and the price is not moving?
Yeah, no,
so it'll come back.
It'll come back, but I can tell you, the reason it is not coming back is because people are scared. You buy something, and more often than not, it's going down.
Yeah.
So that's why it's not as if people are not finding things interesting. It's just that, you're waiting for the other guy to jump in first, I guess, and show that maybe the market is ready to move on from this corrective phase. Sudeep, I don't know if you track IKS. When a lock-in ends and a 12-13% cut, I mean, who sells 6-7-8% lower? I mean, it started there and then continued to fall.
I think overall, this issue has become quite big. A lot of these institutional investors, so-called qualified institutions buy and with lock-in, and they just wait for the lock-in to end and exit. Also, I must say that this is a phenomenon which we are witnessing now, because overall the market has come down significantly, and some of these investors probably wanted an exit or a part exit quite some time back. They were just waiting for the lock-in to end, and I think that's the reason we are seeing. It's not that always we see this kind of reaction in good quality stocks. Or stocks where there is definitely long-term fundamentals, long-term structural benefit. But I think the circumstances are such that a lot of FIIs are waiting to sell.
Okay, by the way, I just want to point out that US futures are still a little shaky. And European markets as well are flat at best right now. So we don't have a very big risk-on trade playing out in the Western markets. Europe is flat. And the reason why US futures, at least for the time being, are a little measured is probably because of those comments that we had from the US Treasury Secretary, Scott Bessent. And he spoke on Sunday to, the US networks. And basically he said that, what's there to worry? If there is a market correction, so be it. And sometimes you have to ensure that, things don't go in an overdrive. In fact, maybe we can just play out specifically Mr. Bessent's sound bites, because that's something the market has heard very carefully. And maybe that disappointment is keeping a lid on US futures, at least for the time being.
I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government, and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the market. Look, that's the nature of these reciprocal tariffs, that all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
So basically, the fact is that neither the US president nor the administration seems too concerned with the market fall, and that's what seems to be spooking investors. Sudeep, very quickly before we get to the close, any other buying idea?
I think like defense. I think, after a long time, I think defense does look very interesting. Globally, the rearmament is happening, and there is a lot of opportunities coming up in Europe, and particularly in defense electronics does look very good. Of course, we have BEL, which is a very good company, and they're doing well. Continuously, order wins are being announced on a daily basis. And beyond that, I think the opportunity which is staring them on the face is huge. And I think they are up for grabbing those opportunities. It's a well-managed company, so acquiring BEL at current level does make tremendous sense.
Yeah, absolutely. Sudeep, stay with us. We're going to just take a quick commercial break here, and we're going to come back to you as we wrap up markets. So 115 points higher on the Nifty. Nifty Bank ending higher, largely led by the private bank pack. Healthcare, pharma are two areas which participated in the upside if you want to look at sectors. What did poorly was FMCG as a space and the IT services index, which was also lower. And having said all of this, of course, market breadth left a lot to be desired. On my screen, 1,800 stocks were higher and about 1,100 stocks, 1,800 stocks were lower and about 1,100 stocks ending the day in the green. So that's the overall picture. A lot of names on the downside, but actually, one caveat is that volumes, if you really want to look at it, I think it generally also maybe a little low volume day. We'll get the numbers and compare it with the average. But in terms of volumes, what we saw, bulk of the volumes on stocks which were higher, even as advanced decline was negative. What was down didn't have too much by way of volume. Maybe just the top 5-6 names had volume. After that, lots of names lower, but on pretty very, very thinly traded in that sense, which was not the case on stocks which were higher. So here, much longer, 15, 20, 25 names with 5, 6, 10% gains with decent sized volumes as well. So that's the overall kind of take. But of course, lot moved, Rima.
Indeed. So just on the way down, you had stocks like MobiKwik, IKS, where the lock-in ended, and these stocks got hit very hard. MobiKwik ending with a cut of about 8.5%. IKS down 10%. Ola Electric, negative news, subsidiary being taken to the NCLT. So that is under pressure. On the way up, you had strength in a couple of these financial names. So Karur Vysya Bank in the mid-cap banking space had a gain of more than about 5.5%. KC International, the order win boosting the prospect, and Samhi Hotels makes it on the price and volume charts, and pharma on the whole also had a pretty good day with names like Dr. Reddy's, Cipla, Sun Pharma ending higher. That brings us to a close on this show, but don't go anywhere. On the other side is Markets Forward.